Welcome back. Well, they say if at first you don't succeed, dust yourself off and try again. That's exactly what Cilo Cybin did after it failed to list on the JSE in 2022. It finally listed as a special purpose acquisition company a year ago, and investors got the opportunity to sift through its first annual financial results as a company in the public market. Being the first fully vertically integrated medical cannabis company in South Africa, Cilo Cybin is navigating new and murky regulatory waters. And to give us insight into the journey so far is company CEO Gabriel Theron. Thank you so much for your time, Gabriel, and for joining us in studio. It is good to see you out of your lab coat for once.
Yes, thank you for me.
Well, Cilo Cybin listed as a SPAC on the JSE on the 25th of June last year. It's been a year of Cilo Cybin on the JSE. What has the last 12 months looked like?
A lot of frustration.
And excitement, I'm sure.
And excitement. They always go hand in hand.
Yes.
So we started our journey for looking for our first viable asset, and I think it's no secret that we are buying our operational entity called Cilo Cybin Pharmaceutical.
Yes.
We started that process, the valuation. We needed to get third parties to look at the valuation, to agree, because it's a related party transaction.
Yes.
We need to make sure that our investors are comfortable with the valuation, obviously. That took some time. We submitted to JSE, and in that process, the target, so Cilo Cybin Pharmaceutical, started performing quite well. And what we wanted to see was if it was possible to move off Altex onto JSE main board.
Yes.
But you had to meet the minimum criteria in terms of profit and share capital and so forth.
Yes.
That caused a little bit of delays because we needed to give JSE audited financials. The year end was now in March,
Yes.
End of March for the operational entity. And we've concluded that, and we happy to say we're in the final stages. We're submitting for final reviews now to JSE.
Okay.
And that will then basically approve that we can go to shareholders to do or get the vote then from the shareholders to pass the transaction. And hopefully we're holding thumbs that they will allow us to move off Altex onto main board.
All right. Well, we all got a chance to sift through your financial results, of course, for FY25. And you did swing from a profit to a loss. Understand that you mentioned a once-off acquisition cost related then to this acquisition of CC Pharmaceutical. Is that all there is to it? And is there growth, profitability in that asset?
So if you look at so now we're talking about the SPAC vehicle.
Yes.
So the SPAC vehicle, the only income it can generate at this point in time is interest. So it's because of the funds that we raised originally, that gets placed into an escrow account where it's generating interest.
Okay.
That's where the income is coming from. The costs or linked or associated to this is, yes, one for the transaction, which we budgeted for. All of the fees were from all the service providers that is required to get us to submit to the JSE.
Yeah.
And then also there's some salary costs in terms of the CEO, CFO costs. So those are the major cost drivers inside of the vehicle. And it will look very, very different once the acquisition is complete, because then you can see a group view rather than just we call it the fund view, the one that's doing the acquisition. So next year it will look very, very different. We are part of this process with the buyout. There will be a consolidated financials issued after post-transaction.
I must tell you, this is opening up a whole new world for me in terms of financial complexities when you look at the different vehicles. Let's talk about the regulatory landscape, because Cilo Cybin has been quite vocal about the heavy and unclear regulatory landscape in South Africa when it comes to cannabis. What are your biggest challenges that you're facing there, and how are you navigating the uncertainty?
Loaded question, I think. Look, in terms of South Africa, we've made a decision to stay kind of out of it.
Yeah.
We've got a small product range which we put on ice for the good of the last probably 6 months.
Yes, and that's sales-wise.
That's sales-wise.
Yeah.
That's the local. We've got a couple of CBD oils for the local market.
Yeah.
Those ones we put on ice for a rebrand. We needed to do a little bit of a refresh as well.
Oh, is that where the rebrand is going into the South African products?
That's for the South African line, but
Okay.
we also at the same time launching it internationally.
Ah.
So that will then go into, we're busy opening up Europe, and then hopefully Australia, we can also, that little brand, get it in there. But our core focus in business is not really around our own brand at this point in time. It's a longer term strategy, and that will be more in line with when we go for registered medicine, so clinical trials and that route.
Okay.
Currently, our main focus is around third-party contract manufacturing. So we supply most of the big players in Australia,
Yes.
and now hopefully into Europe as well, with their brands. So we contract manufacture for them their own brands. So that's mostly where we're playing. So in terms of the South African space, we stayed out of it a little bit.
Yeah.
We're very excited to see what is going to happen here. We hope that it will open up in a similar fashion to what's happened in Australia, whereby you can go to a doctor, get a prescription, go to a pharmacy, get your product, and it's regulated in that way. So a little bit, some of the red tape be removed.
Yes.
But we also support the fact that it stays within the medical cannabis realm and not necessarily recreational. I think we're still far from that, or adult use, if you want to call it that. But in terms of our focus has always been medical cannabis.
Well, I mean, as much as there are challenges along the way, but you seem very comfortable in treading new waters. And actually on that, in terms of drug development, how is your journey looking like in terms of diversifying into psychedelics?
Well, I think the first step for us now is to start the process with a registered cannabis product.
Yes.
We're looking at a couple of options there. Once that process has started, I don't want to focus on too many things at once. So we've just finished expansion on the facility, or in the process of finishing expansion. That will make us one of the largest extraction facilities on the continent. We've increased our bottle line capacity, so from when you last were there, we were
2022.
It was like a manual little system. Now we can do 2,500 bottles an hour.
Amazing.
We will go up to, current expansion will go up to about 100 liters of distillate a day. We are sitting on probably 10 liters 2 weeks. So we're really scaling our capacity. So that's all on the cards. The next step is then to go into the registered, starting clinical trials, so registered medicine, and then opening up the door for, first need to speak to the regulator, being allowed, but to start looking at what can we do in the psychedelic space. And if you look at countries like Australia, they've already started opening. Doctors are now allowed to prescribe psilocybin, which is magic mushrooms, and they're allowed to prescribe MDMA.
Yes.
LSD, not yet, but those are all coming. But in terms, it's still a very, very small market. So from a growth and a looking after our shareholders' interest, it's more an R&D project now because it's very small. Well, it will be R&D and then go into manufacturing. So the focus is now in terms of the revenues. Let's drive the revenues, and where is that? And that currently is still the cannabis space. Yeah,
and actually, we could talk for an hour, but we do have to wrap up the conversation. You talk about the expansion in the facility, making more products. And I mean, you are a pioneer in that space. Vertically integrated manufacturer and one of the few players under GMP in South Africa. How much space then does this create for collaboration in the industry?
Look, I think for us, the reason why we went that route is we can see that the prices are coming down for the extract, if I can call it
All
that,
right.
on a global scale. So we now need to start competing where, I'll give you an example. Distillate is a THC extract, so it's a golden oil. In 2017, that was selling for $75,000 a kilo.
Woo!
2 years ago, we were selling that for around the 10,000 mark. Now, the market, the Colombian guys are selling it at $700.
That's crazy.
So just to show you, so the only way to survive is you need to, now it's becoming a scaling. So you need to be able to put volume through, lower margin. And then be able to take that and put it into different products where there's still big margin. So the only way to survive is scale. And that's why we went okay, we need to go scale. There's two options. You can go scale, big volume, or you can go boutique. And we went scale, big volume. But in terms of collaboration, it now opens the door that we can start looking at extracting for the hemp industry as well, and no longer just for the cannabis, so that we can bring the CBD products in as well, and doing it locally rather than sourcing from elsewhere.
Okay, well, thank you so much for your time and just giving us a picture of Cilo Cybin's journey so far in the public market, and really looking forward to developments that you come up with in the next phase of your growth.
Thank you.
That was CEO of Cilo Cybin, Gabriel Theron.